Feels like it too. 841 advisory services offered through Second Half Financial Partners LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. Which means it's time to check in and find out what Wall Street's doing to or for your money today. And the fact that the legal meagle's there means I got some pleasant surprise. Phillip Statler is back and on the telephone from Statler Financial. How are you, Phillip? It's good to have you back.
Hey, good to be back, Dave. Tired of, 6 or 7 days laying face down, trying to get my eye to heal up from some surgery. Hey, we are almost there. I'll be back in the office on Monday. Thankfully, I'm getting tired of hanging around the house for a while and looking forward to getting things kick-started again.
Well, I'm really glad to have you back. Back us up to yesterday on the market, and we just kind of continued that slow decline we've had for the last 4 or 5 trading days. Dow fell 153, Standard & Poor's down by 26, NASDAQ down by 73, just kind of continued to trend downward. We just don't have a lot of good news to move things together. The fact that Walmart missed the street yesterday didn't help, and my tip sheets are saying basically that the big-time investors are starting to wonder if we're ever going to make any money out of artificial intelligence, so consequently they're starting to rotate out of the big guys that are spending billions on the stuff.
Well, definitely. We are seeing, some indications that obviously AI is being talked about a lot. Obviously, it has been for a while now, but we are starting to hear little, cracks and mumbles about, bubbles when it comes to AI. And we're seeing, actually, I was in an investment committee meeting yesterday talking about how Meta, has pulled back. They're not going to go out and spend this, $100 million to hire people to come develop their AI. They're going to sit with what they have and continue on a more slower pace. We're seeing that with other companies too. And so the question becomes, have we reached a little bit of a bubble in AI? And that could have been some of the pullback earlier this week.
Could very well be. I mean, it's been my feeling all along that we're kind of ahead of our skis on expecting artificial intelligence to be a money machine. I mean, nobody expects it to be a nothing burger, but at the same time, it's kind of like when the internet first got hot. Okay, fine, it's really cool, it works great, and it's wonderful. So how are we planning on making any money off of it? It was 20 or 25 years worth of screwing around on the internet before a few companies like eBay and a bunch of other ones figured out that you could make money off of it and came up with a platform that actually generated some revenue. Artificial intelligence right now, for a whole pile of us, is almost a glorified search engine and not a lot more than that.
Well, that's true, David. And the question is, how do I monetize it? Because that is the key. A lot of companies that I have different platforms on are adding AI components, but there's no extra charge for that. I wouldn't pay extra for that, right? So how are they going to monetize that? How are they going to make money off of it? That's the key, because until a business can figure out how to monetize it, it's only a drag on their bottom line. It doesn't help the bottom line any.
Yeah, and if anybody wants a cautionary tale as to what happens when you get too far ahead of your skis, the big internet and the tech bubble that we had back in 2000 would probably be a pretty good model. We got a bunch of people that were buying what they figured were going to be gold mines, and the companies that survived that bubble crash actually did turn into gold mines. We just got about 15 years ahead of our skis on it in terms of how much we were willing to buy, how much we were willing to spend in order to invest in that future.
Yeah, exactly. So we'll have to wait and see how they can monetize it, how quickly they can monetize it. That'll definitely be the key to AI.
Absolutely. That amateur reading that I've got, my fear and greed index that I watch so carefully, it's moving downward as the experts are moving their money out of Magnificent Seven and internet startups. The fear and greed index is now back down to neutral. It was up to extreme greed a week and a half ago, kind of hovered around greed all week so far this week. It just ticked down into neutral. So the amateurs are looking at it and saying, oh, maybe these guys have a reason to be wary, and that's going to make things intriguing. Big news that's happening today is going to be the market mover, and about the only major news that's happening is Jay Powell standing up in front of all the big heads in the world finance at Jackson Hole, Wyoming, and telling them what he thinks is going to happen and his rationale for why he's doing what he's doing, and maybe giving us a little clearer picture as to which way he's going to try to nudge the open market committee as far as interest rates next month.
Exactly. That speech is coming up at out there in Wyoming, Jackson Hole, and everybody's kind of waiting to see, because the indication is, or at least the front running thought right now, is that he won't directly say it, but that in his speech he will hint to to his support of reducing interest rates. Not huge though; they're only talking about a quarter of a point. We talked about yesterday in my investment committee meeting. A quarter point doesn't do much, and even if it's a half a point between now and the end of the year, that really doesn't do much for the economy as a whole. I mean, I guess
more just the psychological message it sends, I'd imagine. Yeah,
psychological stuff, and that's really about the size of that. And we'll just wait to see how that really turns out. It may send the markets going crazy next month when that happens, but I doubt it. Like I said, I don't know that we're going to have quite that much of a change. Big news though, I saw this morning when I opened up my browser, is that we got another woke company.
Oh,
Cracker Barrel.
What? Yeah. Oh, that's been the hot button on Facebook now for a day or so. They got rid of the little old. Yeah, they got rid of the little old guy in the whiskey barrel on the Cracker Barrel logo, and they're trying to outdo it. I've seen some reviews that say the new redo Cracker Barrels look like a damned IKEA right now.
Oh, me, I tell you. It cost them about 12% in their stock, though. That's crazy.
Yeah, I saw they felt like an absolute rock. I mean, could this be the next new Coke, right?
Yeah, exactly. We'll see how fast they change.
Absolutely. Talking about the federal interest rate cuts, I follow the Chicago Mercantile Exchange is not only a good way to make money and invest money, it's also your financial bookie. They've got a FedWatch tool going on. Last week while you were out, we had the odds of an interest rate cut in September up around 96%. This morning they're saying it's down to 75%. So what happens after the Powell speech today could be interesting. A couple of their governors of the Fed were on the rubber chicken circuit. The guy that runs the Cleveland Fed said that the September rate cut should not happen, and the Fed should be laser focused on inflation. So it's not going to be a universal vote come up September, even if Powell indicates he's supportive, right?
Well, that's right. Now, I looked at the kind of the economic calendar for next week. We don't get the PCE until next Friday. And that could be, I mean, that's a half a month before their meeting. That may be an indicator of which way they end up going. It may sway more Fed governors to vote for a rate decrease. It could do the exact opposite, though. If inflation comes in hot, it could sway the Fed governors to say, maybe this isn't the right time. Maybe we do need to wait another meeting to determine what this looks like after the tariffs really kick in.
I do not want to watch social media out of the White House if they do nothing in September. It'll just get brutal, won't it?
It will get brutal, but we're seeing, I mean, I was reading an article about Home Depot yesterday, how it's seeing some tariffs are putting some pressure on them. They're going to have to pass on some of that increase. Now, they did say only 50% of their product mix comes from tariff countries. Basically, 50% comes from the United States. So that's kind of good news. But they're seeing, the consumer, you and I, we're still being close to our vest when it comes to spending. We're not going in debt to really improve our homes. We're taking care of the things we need to take care of, but we're not going into debt to do those things right now.
And that's probably wise policy anyway. And the mainstream media has been doing its level best to say, yeah, inflation's coming, just don't know when. And some of that has some economic backing to it. Some of it has motivations that because we don't like the people in the administration. I don't know for sure. We haven't seen a big ticket inflation based on the tariffs so far, and it's been since the part of April since we've had the 10% base tariff numbers. So it's an open question as to whether or not we're going to see a spike in inflation. And I'm not sure I buy the mainstream media saying, no, it's probably going to be, 2 months from whatever month I'm talking about now.
Yeah, no, no. But it's been long enough now. We are starting to see some. I mean, we talked about it yesterday in our investment committee meeting, how we are starting to see now that tariffs are starting to play a role in pricing, and so how that continues will be left to be seen. But and we got a couple companies that have reported before we get done today. Intuit, a real popular name when it comes to bookkeeping, tax, QuickBooks, it's all the thing out there, and so their quarter, they beat on revenue and on earnings. However, the growth was slower than anticipated for this next quarter. And so that's got them pulling back about 6% earlier this morning. Let's see where we are now. Now we're down about 6.5% now. So a little bit of a drop there. Another big company when it comes to business is Zoom. Zoom Communications reported. They beat on revenue. I'm sorry, they beat on earnings per share. They missed by just a little bit on revenue. Pretty close though. They're trading up about 4 1/3% this morning. I'm trying to think. I got one more. Ross Stores. I know you probably talked about it yesterday or day before. I read a little article about TJ Maxx and some of the retail stores doing well, and wondering how Ross Stores was going to compete, and they not too bad. They beat by a couple cents a share on their earnings per share. They did miss on revenue by just a little bit, and so but they're still trading up 3.6% this morning.
Take it happily. Resetting the table for the morning. It was a modestly down day yesterday, which really offered the jitters over inflation. The Jackson Hole meeting and a miss by Walmart really wasn't all too bad. 45 minutes before we open this morning, what are we looking at?
We got some green ink out there, Dave. We got the Dow up a third, the S&P 500 up 1/4 point, the NASDAQ 100 up a little less than 0.2%. The big winner right now is the Russell 2000. It's up almost 0.5%. On the other side of the coin, we got silver trading down about 0.7, and gold down almost 0.5%. Crude oil is up 1/4, but still, I like the price at $63.67 a barrel right now.
It's still low, but it's almost $1 a barrel more than it was yesterday at this time, so I'm going ouch just on general principle. Overseas markets, the Asian Rim was generally up. The mainland Chinese markets, one of those was up by a full 2% at the close at 6 a.m. European markets up on average by about 1/4% midway through their trading day. Want to get my retirement together so I can afford to retire someday. How do I find you to help you get a plan? Help me get a plan going?
David, give us a call, 863-382-0037. Schedule a 30-minute phone call. We'll talk about where they are, where they need to go, and how they want to get there. Make sure they're on the right track to the retirement they always dreamed of. That number again, 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And we'll be back together again next week. It's really good to have you back, Phillip. Have a good day.
All right, buddy. Take care.
Take care. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, again, I want to thank you for joining us today. Hope your week has gone well. Have a great weekend. I look forward to speaking to you again next week. Bye now.